Hello everyone, Kasm Khan is here. Please subscribe my channel and press bell button for more updates. So guys, today we are going to learn a part 4 of interest rate, that is risk associated with investment in overseas securities. Nowadays world has been changed into global world, global village, and most of the time many investors are interested to invest in multinational corporations, and you also invest in like overseas securities as well. As like nowadays everyone is interested to invest in New York Stock Exchange, same like London Stock Exchange and Tokyo Stock Exchange, because most of these stock exchange have a wide kind of businesses. तो इसमें क्या होता है कि when the people are interested to invest in the overseas security, so what kind of the risk they need to consider if they are investing in international security. So the two main types of risk that an investor looking to invest in foreign securities. The first one is country risk and exchange rate, and the second one is exchange rate risk. What is country risk? Country risk is not as uncertain and dangerous as comparative to the exchange rate risk, and this risk is more volatile, and credit risk is not as much volatile and uncertain as comparative to the exchange rate risk. So what is country risk? Risk that arises from investing or doing businesses in a particular country. So obviously every country have a different level of development, different financial system and infrastructure, and different development infrastructure. So obviously, if your company, if you are going to invest in a developed country, that will be totally different from the developing countries. Availability of resources, availability of raw material, so many factors you need to consider before to invest in that country. So this risk depends on a country economic, social, and political environment. Economic risk, let's suppose micro and macroeconomic trends in that country. Social are like there are so many social, like if your country is a Muslim country, you need to follow the Muslim trends and the events. And if you are like a non-Muslim, so you need to be change your business pattern according to that country and political environment, as many countries follow different government structure like democratic and same like as dictatorship. So what is the political environment of that country, and what are the political policies and for the businesses? So how that political environment is like feasible for the business and in the favor of like business. So countries with safer political, social, and economic environment have a less country risk and therefore are safe choices for overseas investment. So if we talk about all these risks in developed countries, these risks are less as comparative to developing countries. So exchange rate risk. What is exchange rate? Exchange rate is basically uh, the conversion rate of one currency into other currency. Let's suppose today I have a dollar, and $1 is converted into how many rupees? One into, let's suppose, 160 rupees. So if I'm interested to buy $1, so how many rupees I need to pay? And today, let's suppose 160 rupees. Again, I need to pay to buy a $1. That is basically exchange rate. So risk of losing money in local currency because of fluctuation in the value of foreign currency in which investment was being made. Let's suppose if any USC company, any multinational company is interested to invest and to start a business in Pakistan, obviously they need to convert their country currency into local currency of Pakistan, and that is rupees. And obviously when that company will give money back to the parent company, and that company subsidiary company need to convert this local currency into again other currency. So this kind of risk associated with the exchange rate. and recall example narrated in the class. So suppose a US investor purchases Japanese bond, the US investor gets interest rate in Japanese currency, which must then be converted into US dollar whenever he wants to make a purchase as the investor resides in the USA. So whenever yen strengthens in composition comparison to the dollar, it means yen can be converted into a larger number of US dollar, and this the investor will be better off. On the other hand, if the yen weakens relative to dollar, it would mean yen conversion into dollar will give off fewer dollars and the investor will have to suffer. So there are both consequences exist. Let's suppose if this example is very simple, and if you let's suppose invested in other countries, you need to convert, you need to consider the exchange rate. Sometimes it gives you better off, and sometimes it gives you like sometimes you will suffer in it. So you need to consider whenever you are going to invest in any other country. So it was all about what kind of risk the investor need to consider when they are interested to invest in international security. So it was all about the interest rate as well. Thank you so much for watching my video. Take care, stay happy, stay blessed. Bye bye.